We have a Brexit vote that is coming up overnight, and the market has been trading rather skittishly, to say the least. I'll tell you this: as far as the implications of what the Brexit means for us going forward in the markets, I think it's rather unknown, and people always fear the unknown. I think it's not so much they fear the actual event, it's what they fear other traders will do with the event. That's really what it comes down to. So I don't really have so much of an opinion about what the Brexit would mean for the global economy, although I will tell you this. My personal view is, if I'm not a British subject, if I happen to be one, I would be voting for the Brexit. I've never thought the EU was a sustainable entity. It's really very foolish to try to tie monetary policies together and not have like a unified government. Each of these countries has very different structures and different issues. The Brits were smart. They never joined fully the euro. They still kept the pound. So regardless of what I think or not, the polling shows that it is highly unlikely for there to actually be a Brexit. It seems as though the Remains or Brexins, or however you want to call it, is going to be carrying the day. That seems to be what the market is focused on. I've seen quite a lot of polling, and it just seems that that's going to be the case. The market, I think, has now factored in that there won't be a Brexit. If there is, there could be a bit of a rude awakening. As far as the S&P 500 goes, the move that has been priced in through tomorrow's expiration is $3.69.5. So that would roughly, if it was an up move, take you to 214.5 or down to 207.11-ish. Yeah. So that's about the expected move. I will say this: I never like when markets run hard in front of events if you're playing long, and this wound up being a bit of a sedate day until the very end, and you just got that complete, kind of spike move higher from, I think this was 3:30 to just now. You moved from a low of 2096 quarter all the way up to 2113 quarter. Wow, that is definitely a lot of short covering. I'll tell you, I was looking at SPY, and we had that big gap. This was on the 7th. Hold on, what day was this? The 17th was the close. We had the kind of double bottom, and then the gap up day was the 20th. So that was 3 days ago. So Monday was the 20th. So it struck me as interesting that a lot of people were. Let's lay the groundwork. There has been a lot of pessimism in the market, and a lot of the people who were, I would say, short pre-failure of Head and Shoulders are still short now. They were short pre-Head and Shoulders scare, which I had told everyone I didn't think was going to follow through. It wound up being that way. They were short during the Head and Shoulders scare, and have still remained and have even added to their shorts post. And I talked about on Monday, a lot of people, and you could go back to my Twitter stream, I wrote that I thought that gap trapped a lot of people. It didn't kind of play out to fruition, to resolve to the upside until today, but I think those people were trapped. They just didn't realize the door to the cage came down on Monday, and they sort of, I think, still thought that they had the ability to get out. That was not the case today. So let's discuss what really transpired here. Why was today such a violent up move? So you had the gap on Monday, and then you've had now 2 days of consolidation, and it's been futzing around. It's been struggling. I talked about a couple of levels that were very key. Both of those, by the way, held the 50 MA. The 208.54 was the top of the potential right shoulder that failed. The 208.97 was an old reference high from a while back that I use as a demarcation for the upper distribution. And you've had this like gap and consolidate, and then today you broke over those highs. The key factor about today's move is that today took out not only those 3 days, but you had another 7 days worth of trading, and now 8 days, almost 9 days worth of trading this day now took out. So anyone and everyone who was short is during the last week and a half is now underwater and wrong. So that's why you're seeing this like crazy spike up into the end, because everyone's afraid of, the upside in terms of the Brexit. I'll tell you, I did a poll today as early as today, and it was based on the Brexit, and I'll tell you, there's still oddly a lot of pessimism still in the market. I wrote the poll, it had 174 responses. It's will SPY trade higher or lower post-Brexit vote, and higher was 55 and lower was 45. So yeah, I guess the market is still, most people are usually perma play longs, so. But that's a really that's still a lot of pessimism in the market, and I think people just don't really understand what a true euphoric market looks like. I'll tell you, I've been trading since I was a teenager, and this is far from people kind of counting the points from the top and looking for all kinds of crashes and failures. That's not when there's a euphoric market. It's when I'd ask a poll like that in the night, like 1999, I'd be surprised if single-digit answers came back, or maybe low teens came back with down. It would have been all one-sided to the upside. That is a euphoric market. So it seems to me like this could still be setting up for this kind of blow-off move through the highs. Now, my tune for the markets has been quite, I should say, attuned to the Fed. And the date that Yellen gave her speech was 4/12. I had talked about looking for that rally to kind of the run-up we had into there to lighten up on positions and even look to get short. After that speech, that was the game changer for me. And after she kind of capitulated and covered really everything I wanted to hear, and then again reiterated that and arguably was even more dovish this last time, I started getting the inkling that we were going to see the all-time high again, either the old all-time high or potentially a new all-time high. And I still believe that that can be the case. However, I don't love the setup here going into tomorrow, at least as much as I did before this kind of big zoom into the close. That won't necessarily matter if we are in a blow-off mode, because you can expect to see lots of days like that back-to-back to kind of finish the move of the market off to the upside. So today was technically a breakout of range. So today would technically be considered day one of a breakout. The only issue we have here is that we have this Brexit nonsense in front of us, and we'll have to see how the market trades post-Brexit. I tend to like to be the second mouse. The theory there is that the first mouse gets its neck broken when it goes for the cheese, and then the second mouse gets to eat the cheese. Yeah, I mean, if you're right, you can often be, the first mouse will get a few pieces of cheese, but in the end, it kind of doesn't end well. I like to not be the gambler. I like to play for the quote-unquote more sure money. I still have a lot of, positions on either way, and I've had a long bias, and I still have a bit of a long bias. It's maybe a little less intense here now that we closed up, but it seems to me that the market may want to go a little bit higher. It did, however, fill the gap in the after hours. I don't necessarily know if that's going to be the sort of the sticking point, but we'll have to see how that plays out. I will use today's range as a guide. I will tell you this. I want to just I want to caveat something. If we have a kind of a gap up tomorrow, we have to see if it holds, if it's going to be a gap and go, or if it's going to be a gap and kind of chop, or a gap and crap where it comes back down and fills in the play. You now have. I want to see how overnight inventory handles itself. I think the Brexit votes are all going to be done by about 2 a.m., so we'll have some answers then. But you've had quite a run-up in like the European banks, which I highlighted in the weekend review video. I know a lot of you were kind of asking me why I covered them, but I think hopefully the move this week showed you why, and I love that a lot of people were asking about Deutsche Bank. Yeah, someone just said that the polls just closed now, so we should have some answers hopefully soon on the Brexit. The interesting thing to me, and this might be a I don't want I want to just jump off market quickly. One of the things that I will find really interesting is if there is a Brexit. The ultimate trade, I think, at that point will be to go into one of these political betting sites and bet for Trump, because I would say if there is a Brexit, he is like almost a lock to win the presidency, and that could be an amazing bet. It would be non-market related. Whether you like him or not, it doesn't matter. You can still make money on that trade. That to me would be the play. Anyway, if there's a Brexit, obviously, I think the consensus is that there will be a down move. We'll have to see how that plays out. Gap rules tomorrow are going to be in effect. If the market opens up or down, can it hold the opening 15-minute range? Sometimes it's even the opening hour range, and then I think you can play against that. Like I said, I don't love how rich we closed. We're currently over $17 above today's volume-weighted average price, which was down at 2096 quarter. So if there's a move down, it wouldn't surprise me to see that get retested. And then if that were to fail and we were to have a first gap fill, we would be down close to the today's point of control was 2076.75. So that would make some sense to me, and that would coincide roughly with the measured move. I'd be looking to play it that way. Anyhow, that's SPY. That's where it should be trading to. I don't necessarily know if tomorrow's move, even if it's down, is going to be kind of like quote unquote the top of the move. I do think that it'll get a lot of people worried who have been long. But again, like I said, you have 8 days, almost 9 days worth of people trapped short. It seems to me like there's probably a little more capitulation to be had there, because today was really the first day of the move over, and I think a lot of them are playing the hope and pray game with regard to Brexit. They're hoping that there's a down move and that'll save them. We'll see how that plays out. With regard to individual stocks, I had talked about Deutsche Bank. I actually booked some profits on it yesterday. I guess that was a little premature, although it wound up looking pretty smart because I sold it up early, really near the open, and it wound up closing on the lows, and it rejected at the 50 MA and a secondary downtrend. Today you broke that. There's maybe a little bit more gas in the tank up to the primary downtrend, which is around 1850.50, around there. So maybe you see a little bit more of a move, but this is now going to be almost a $4 move in Deutsche Bank off of a fresh low, which to me is now looking like a look below and fail. So I might be back in the buy the dips camp with Deutsche Bank. I think the real problem, and I think what got everyone nervous with Deutsche Bank, is that they thought it was a credit issue. Everyone is still fighting the last recession or the last, bear market. That, there had to be something that this company was going to go. I think the problem is that you have zero interest rates, and in Europe now negative interest rates, and these companies just can't make money. They're supposed to borrow cheap and lend expensive, but they're borrowing cheap and lending cheap. And there's actually, a lot of these banks have not been lending because there's not much money to be made there. I mean, if you're lending people money in 2% and 3%, I mean, there's a ton of credit risk there in my view, and they're very stringent upon who they're lending money to. So the money has kind of been locked up. I think that's also why you're not seeing a lot of inflation, because there's just the money is not being circulated. Anyway, that's my view with Deutsche Bank. I don't really think that they're going to be I don't really think that necessarily think that they're going to, that they're going under, but I just think that those European banks are struggling to make money. The same problem with the U.S. banks. These companies have been like all of them. J.P. Morgan, we know, is the best of the bunch. They've been struggling. I know there was that, kind of Jamie Dimon bottom. The stock has run up. It's actually still caught in a down channel and sort of looking like it's setting up for a head and shoulders top here, believe it or not. So we're going to have this, actually quite a textbook head and shoulders here. So if this can't now, in my view, eclipse the highs, the recent highs around 66, I'm going to be a little bit of suspect. If it can bust through there, then I think it's going to go up fairly quickly to 69s and maybe 70, but this is looking a little bit suspect. One thing I will say, the one I've been really using as my kind of proxy for the financials is Morgan Stanley. 2616-ish is the neckline I have drawn in. I probably could adjust that because there's been some price action since I drew that in. I tend to be pretty stubborn with my levels because they usually are the right ones, but this one looks like it could use maybe a little bit of finagling because there's been some different price action. We are back into the channel here, but I would say as long as you can hold this one above, I really like my levels there, really, because you had the 2-day consolidation. Yeah, I like it. Anything 2616 to 2630 plus, I still think that the path of least resistance would be higher. Below there then gets real iffy, and I would say that that's signaling some greater weakness in the financials that you probably don't want to be around for. I'm looking at the VIX. That has been really rather. I think what happened with the VIX, and this is what I said happened. Remember with the probabilities for the rate hikes, how they went down to like 6% or whatever, and then they jumped up, to like 30 or 40 or whatever. I think what had happened and what the market has been doing, it has been overly discounting these types of scare events. And then very late, the market, it sort of like realizes, oh, wow, we got that. We better put on some protection. And they overly compensate in a short period of time because everyone is so on one side of the trade that the snapback overshoots where it really should, and that's what happened with the rate hike probability, which I said was almost, in my view, was not even. I don't even know why it was even being considered. I don't want to get into the Fed too much because I think they're really off the table, but I've always said you have to switch from being hawkish to neutral. I'm sorry, from dovish to neutral to hawkish. Yellen never switched to neutral. She was still in dovish mode, so it seemed very unlikely to me that she was going to flip from dovish to hawkish without first going neutral. That is really the key. A lot of people, like I said, in trades, you don't just go from being right to being wrong, you go from being right to neutral to wrong, or from wrong to neutral to right, meaning you have to flip your position, there has to be that switch. And if you can nail that down, that moving into neutral first, I think you'll improve your trading. It's just my view. I think it'll work out well for you. And Yellen had never flipped, and I don't think she would do anything drastic before a press conference. And we just had two now, where where she was really, amazingly dovish. And I think you can now say that these Fed heads, one of them, Bullard, who likes to talk tough, now said, from a guy who was saying that, the rate hike was on the table and that they're going to do multiple rate hikes this year, is now saying he only sees one rate hike in the next 2 years. So and people are still listening to this guy. It makes no sense to me. All of their credibilities are shot, in my view, except for Yellen, because she's maintained the dovish tone. All right, so that covers the Fed. So with regard to the VIX, today we did close below we have a lower high from yesterday, which is good, and now we've we're back below the channel. Unless there is a Brexit, I don't really see why volatility would really spike up that much. I've said I thought we were in a period of more benign volatility with these temporary scare spikes. This looks like it was one for me. I won't be changing my tune on that until we get a close above 25.20. If we can get above 25s, I will start shifting my view on a market bias. I will start getting a little bit more I guess, moving from more bullish to more neutral to a little bit more bearish, because that to me would start signaling we're getting into a period of more sustained volatility, and that's not what you want to see for a bull market. So that's the VIX. Like I said, just the same kind of thing. I think it just people didn't realize. Then it's sort of like they woke up and they realized the test is tomorrow, so to speak. They hadn't studied. They woke up, the test was tomorrow, and they got nervous. You know, they got spooked, and they put on all their protection at once. With regard to some of the market keys, I covered the VIX. Let's talk about the dollar quickly. The dollar is looking quite horrendous. It's making lower highs and lower lows on this leg. We are below that on the UUP 2447. I've said anything below there gets a little bit unsustainable, but man, this thing is just looking terrible. If there's no Brexit, it's probably going to go lower. If there is, it'll probably come back up into range. The bonds, the TLT. All right, so I think a lot of people were, maybe they were confused or not confused. I've explained it before, but I had a few questions from people on this. Everyone says, oh, why is the market rallying? The bonds are coming down, and you always say that the market likes low interest rates. The answer to that is yes, but the answer also is that it doesn't like spiky moves in bonds, particularly with rates dropping fast, because it starts getting people to think there's a recession. We had a very, very steep move up in the TLT. I've said over the long run, lower rates lead to PE multiple premiums, but in the short term, it gets people very nervous. I know someone just mentioned there's a lot of glare from behind. You know what? Let me put the shade down. Maybe that'll help with this a little bit. I kind of hope. No, it's definitely not. It's just the time of day. It's not even really sunny where I am now, but the time of day, the sun is always facing the windows here, and that always causes this like halo effect. It almost looks. I should put up a blue screen, right? And maybe like broadcast like I'm from the beach or something. Anyway, that's the. I think it's hopefully a little better. Anyway, that's the story with TLT. If you do a measured move from the last time it had a spiky move up and down, the measured move was about $8.04. That would theoretically take you down to 129.52. And the channel low, I don't think it's going to do it all tomorrow, but if it were to, that would take you down again to the 127s where there was a lot of support. We're at about half back now from the last move, the low of 127.12 up to 137.56. This was a few-day move over the downtrend. I said, and I hope people took heart of this, that the move was looking very forced, particularly those last few days. It was like going up, but it was going up begrudgingly. Like you had the gap, and then the next day was a doji, and then the next day was kind of like a doji in the doji, and then the next day opened on the highs and closed on the lows. The next day was a doji, and then the next day was a hanging man and a secure high setup. 50 MA 61.8 is around the 131s. That's also roughly around a gap fill. That is a very key level. I will be watching that like a hawk. The 130 to 130.75 to 131.30. That's the 50 and 100-day moving average confluence. The 100 has caught it the last two times. So keep that level in mind. It could be a good row play. If it were to snap, I think things could get a little bit maybe not so pretty. So that's my view there. Oil. All right, so the story with oil is the same thing I've been saying for a little while, that I think we're going to see a move higher. We got up to where I said there would be a lot of resistance around 49 to 52. At the higher end of range, we topped at 51.67. Pulled back quite aggressively, actually broke the channel lower, but stopped like to the tick on the 50 MA. And now we're back up and into like this chop zone. The key to higher in oil, and you could have, believe it or not, this could actually, yesterday's low could be considered a secure low play. It's not really at the bottom of a range, so I'm not going to, get into that. I usually like to play the bottom of a range for the secure low, not up near a high. It's not as valid of a trade. Just forget I said that for this because it's not relevant in my view. What is relevant, though, is 49s. if oil can hold 49, I think the next $10 is up. If it loses 49, it gets a little iffy to me. That is really the vestibule here for higher and lower. I know a lot of technicians will cite other levels. 49 is the correct one. It needs 49 or higher for higher, and if it loses there, it gets a little bit more iffy. I'll just leave it at that. Some of the stocks that trade in there, XLE is held trend. It didn't hold the secondary. It held the primary, which is great. It's now back up higher. It's been making higher highs off higher lows. This last little move down was a little bit of a shake and bake. We're back up. I'm amazed that this hasn't at least retested the 200 MA. The XLE, that was really the breakout for XLE, and I would have liked to have seen a retest of the 200. It didn't, but it's looking okay. It's looking a little bit better. The 50 MA there is the key. It is now roughly where it held the last time as far as the body of that hammer, and that's now also moved up to the primary trend line. So that is, to me, the 50 MA, whichever side of the 50 you're on, is the right side of the trade. Exxon has just been, people were asking me which was the right way to play Exxon. New 52-week high today. This thing is like stapled to the 52-week high list. And I was talking about this like really back when it was almost near the lows. So this has been quite a run. I think Exxon wants to see a hundo again. It's at 92. It's just riding this sort of upper channel higher. I've been hoping for a move back lower to re-add back on some positions. I've been playing this with short puts. And the longer this goes without a pullback, I guess the less long I am because I can't reload on positions. I'm fingers crossed for a pullback in Exxon, for crying out loud. But yeah, this has been a major nice trade. The 50 is 89.08, and the channel low would be in the 88s. Any move back down there, I would try for right or right out. It seems like it's had a few punches through, but 50 MA has been, that was the breakout, and I would assume it would probably hold at least for a bounce at the very least. China. This has been like coiling. It broke a downtrend line, and it's now back above the 200 MA. I'm just going to keep it as simple as the 200 MA and FXI. If you're above the 200 MA, you want to be long. If you're below, you don't want to be so long. We'll leave it at that. IBB is a proxy for risk on, risk off. This thing is just like bear flagging here. It's now, though, making higher lows with lower highs, so it's definitely compressing for something. We're at the lower end of that range now. I said that the real risk for this is to get back down to like 207.48 to 212.08. That would be 100% retracement and a 1.618 retracement off of the top move. I don't necessarily know that that has to happen, but I do know that if it's below 271.77 to 275.40 on IBB, it is vulnerable. Gilead, I'll tell you, I had sold some puts in Gilead, and it rallied, and now it kind of came back down. I'm going to just use this double low, this 81, what was this, 81, come on. 81.43 was the low. 81.28 to 81.43. If it holds that, I'll keep them on. If it breaks, I'll just get out of them. Very simple with the Gilead. It's cheap on a PE multiple basis, but these stocks are all not trading well. There's a lot of political risk, and I think that their margins are compressing. If their margins do compress, and they really are at peak earnings, these PE multiples are not going to look so cheap. They're going to look very expensive. Gilead, though, is probably one of the best names in biotech, though. They make some really solid products. The one I do like the most is Alkermes. It is kind of hugging the 50 MA on a retest. That's been kind of just doing the motorboat higher. It kind of got a little below the channel. Today it closed back in. I like yesterday's range since it's kind of like a big bar as the gauge. Above 44, I think it still goes higher. Below 41.29, it might be a little bit more iffy. Let's just keep it that simple. All right, so another way, I should have mentioned this earlier when we were talking more macro, is GLD. So I talked about this actually, I think, last Periscope. And I said that I thought we were going to have a kind of a false breakout, that people were going to pile into it because they think we were breaking out, but not realize that we were coming into resistance into the 124s and 125s, and that would serve as a intermediate point to sell. Wow, did that work out? It happened exactly like I said. It sucked a lot of people in, it went up, and then it closed basically on the lows. The next day was a lower high, and then, you know, the next 2 days they tried to rally it. Now it's on the 50, so you're really at a key juncture here. I was really actually hoping for a move lower back into like the 109.95 area, which is the 61.8. Gold loves to retest there. I mean, 61.8s in particular. We'll see how that plays. This is just very, very choppy here. I will say this: if you're long, you got 50 MA right here is the must. I would prefer to buy it on a larger pullback. I don't think it's down enough from the highs with a reversal like that. Does it mean it can't go back up? No, it could, but it'll have to do it without me here. I'm not really that interested until there's a bit of a bigger pullback. Silver never made a new high. It's just been chopping. I have some silver on since 14s. I'm just holding it. It's going to be a more longer-term hold for me, so I'm not really trading it up that much. I also like that silver is contained still within that reversal bar. So silver is showing a lot of relative strength. It showed some weakness. Now it's showing some strength, which is always good. So that's gold. One trade I put on today for a right or right out play was this JetBlue. I've been kind of watching it for a while. I had been bullish on it, and then I kind of turned a little early, but it wound up being good. Today you had what's a potential look at below and fail, meaning that you had a lot of consolidation around the 61.8, which was at 16.25. So you had 1, 2, 3, 4, 5 days of consolidation. Today finally had a bit of a spike down. It got to the primary trend. Believe it or not, this is dead on to the primary trend, and then reversed up. I put on a small tester trade today. I would be out of that if we got back below, for sure below today's low. I'd be out and probably short actually, because it would be a failed look below and fail. It would be like it would be the real look below and go probably. So below the low, I don't want to be any long of it. If we got above today's high tomorrow, particularly in a gap, I think it could be a gap and go. So I would say over 1637, so 1638 and above, I think could be a good right or right out long. I would be looking to really put on the real position there and add, particularly if it's a gap above. As crazy as this sounds, the bigger the gap, the bigger the move will probably be. So if it's if it's a little gap, it could really move, but I would think that this could be a big move, bigger mover. If it loses this area, I mean, this thing could fill all the way down to 1360, so be careful. Alrighty. Let's talk about Facebook for a minute. That's kind of my... All right, so I talked about this, that a lot it kind of had a bit of a breakdown. We're contained within that bar below the 116s, and I said that it's possible it could fill the gap, but I didn't think it was going to be a straight shot. We held the channel low. We're kind of just chopping around, meandering. The 200 MA is 106.50. If there was some type of spike move down there, like on a surprise Brexit or something, or some kind of move, I would be a buyer of that all over that for a right or right out trade. The 200 MA and the channel or a trend has held this thing like a champion the last few times it's had tests. I'd be looking for that. Right here, there's not enough IV in these options for me to want to sell premium. If you want to play purely directionally, you can play long puts or long calls. I don't really care which way you want to play it. I do know this. It's below the 50. That remains a little vulnerable. The 100 has held it the last few times, so 100 MA, if you're still long, I would use a break, a convincing break with a close below there as a stop. That's my view on Facebook. So longer term bullish, but short term cautious. If you, that's I think a good way to put it. Tesla had some news this week. Elon Musk, I think, jumped the shark a little bit with wanting to buy Solar City. Solar City is a hated stock. It's got a lot of shorts. It's got a very big following of people behind being short. And this is a very, very key level for Tesla. It never got down to the after hours dump low, which was, let's see, 3-day, 5-minute. The low was 189.12, and then it rallied back up. The key level, the next, like it lost 215, which was the secondary. The next level it really needed to hold was 204, 205. It broke there, and then after that, I had mentioned basically 190.06 to 191 was the key. It looked a little bit below, rallied. It's just been chopping. If this gets below the 189.12, it's probably got a lot. I wouldn't, I'm a little torn with Tesla because there's a channel it's in. And I really was hoping that it was going to open up on the channel low. I would have bought it there for a right or right out trade. I'll show this in the weekend review video. That would have been, if it happened yesterday, it would have been down around 186. And I think that would have been a big enough move to the downside that it would have been probably a long, right around there. We have a bit of a hammer today, so I'll keep it simple, stupid. Above today's high, 97.55, we could probably try and get it back up to at least to the gap. Below the low today, I think we will be going significantly lower. The story with Tesla has never been for me about the cars. It's always been about the mechanics of the stock market, although I do like their product. Why is Tesla defied the bears for so long? Because it's a poorly distributed stock, meaning there's not broad ownership, there's a high consolidated insider ownership, along with a high short interest. So what happens is that the stock gets, down, people are piling in, and then, Musk kind of just nails these guys, and it comes back up. So I'd be careful with shorting Tesla on the lows. I'd be more interested in some kind of failed rally attempt. But, the gap down bar, the low of that bar was 195.75. Below there remains vulnerable, and then below 189.12 is even more vulnerable. So that, to me, is the key. Wouldn't those surprise me, believe it or not, to see this gap fill? If the deal is called off with Solar City, I don't think that Tesla is going to rally, though. I think they're actually both going to continue to sell off if the deal is called off. So at this point, he just better do the deal and justify it and hope that, the reality distortion bubble that they have around Tesla, which is quite large, doesn't fade anymore. Once those bubbles are pricked, they tend to bleed, and they start bleeding progressively as time goes on, once people start waking up to the fact that the story is over. I don't know that the Tesla story is over. Seasonally, it is good for them, although I never saw this deal coming. I think the deal it makes sense to me because he owns Solar City, but I don't know. The street clearly doesn't like it. Someone asked about Chipotle. All right, so this stock is a bloody mess. It's just all over the place. There's a big gap fill that we got just close to. It never fired off. I'm actually a little upset about that. It was 376.75. A 78.6 there is around 346s. Around there, I would have been an interested buyer, but now that we're so close, it might kind of want to go through it. Today was a pretty big engulfing day. We are still below the primary trend, though, which is roughly around the 20 MA. So this needs to clear the 20 MA and get back over the downtrend. This had been in still on an uptrend. It bounced once, and then this time it broke. Looks to me like the retest back. So if you want to try right or right out short against that area, and maybe it goes a little bit more to like 433, which is the downtrend in this leg, that seems okay to me. But it would be a right or right out trade there. That's just my view. I would rather wait for Chipotle to play long for it to break the downtrend rather than trying to be an innovator and bottom pick. I often do nail the bottom, sometimes almost to the tick. But in situations like this where there's story and it's a big stock like Chipotle, I like to see the pattern change first. I like to see a stock make higher lows and higher highs and be in a trend. I don't like buying something that's choppy sideways and has the potential for a big down move. I like when I do for a short, but for a stock that I want to try to buy, I like to see that the tide has turned and that there is at least something to hang my hat on, like a trend line. So that's my view on Chipotle. I would probably just stay away from it, and if you can get it back up to the downtrend line, which I said is the backside of the old uptrend is rightfully around the 20 MA here, I would be trying to maybe pepper into a little short there, and maybe against the primary downtrend line, which is in the 433 area. The stock has moved quite a bit down from the 700s, but I think needs a catalyst. They have earnings coming up. Keep that in mind. This thing is going to move a lot on. Let's see what the earnings move is expected to be. I'm sure it's huge. Actually, this can't be right. The earnings are on 7/21. Let's see which one has the earnings in it. I would assume it's the July 29 options because that's when the IV really picks. It's expecting about a $44.92 move. That seems small for this stock. I'm guessing it could be an outside move. I don't mess with Chipotle on earnings. I was once very badly burned on a Chipotle earnings play, and I just don't mess with it for earnings. These options tend to be illiquid, and I don't like to play with it. Like I said, just stick to it the way I just mentioned before. The right or right out attempted short against the downtrend line. I like that. If it breaks the downtrend line, then I guess you could try long if it pulls back with a higher low and then makes a higher high. Google, everyone always is trying to play Google. I really don't like messing with this stock unless I see it near a channel high for a short or a channel low for a long. They have earnings coming up. I guess today, I saw a lot of people talking about it being an outside day. I mean, it's just in a narrow range here. I'm not making too much of it. For me, our true outside day is a little bit more impressive. I would be interested in buying this. There are two channel lows, depending on how you draw the channel, the bigger one and now the more steep one. So we're in a down channel within a down channel, as crazy as that sounds. The confluence of that with the primary uptrend line is around 645. So I would be interested in a move down there. That would be the channel low. It would be down a lot. And it would be a confluence of some numbers. 682 was also a reference level. This just seems to me like a choppy mess. I really don't want to play around with it until it kind of resolves back into either a downtrend or an uptrend. This is just chop in the range, and I can't even tell you how many people ask me about this stock, and I'm sure most of them have lost money on it. That's just my feel because I never hear from them again. All right, so someone just mentioned that there's some early signs that the Remain group. Yeah, I mean, it seems to me obvious that the British are staying in. I mean, the market wouldn't have rallied like this if there was going to be the Brexit. It just seems to me like the market knows something. I don't know that it's going to rally. It may have used up the rally, but it seems to me like I would be very surprised at this point if there is a Brexit. It just seems to me almost inconceivable. But we'll see. Anyway, I think we covered a lot of good stuff. Like I said, tomorrow I want to be the second mouse. I want to see how this move. Just so you know, I've been long, so for a while. I've been finding that selling puts on these IV spikes has been really the right way to trade this tape. We've been, sideways for a while. You get these momentary moves up in volatility. Like for example, I want to talk about the right way to trade the VIX. First of all, if you ever turn on the television or you hear anyone ever refer to the VIX as an asset class, it is at the top. That is just how it is. It is not an asset class. It is I'll tell you, I have never been able to play the VIX directly and make money on it consistently. I find it very useful, however, to know when to buy and to sell premium in the S&P 500 or in stocks in general. The other day, for example, like yesterday, the VIX closed at 21, and today it closed at 17.25. Congratulations to whoever bought it at 21. You just ruined your entire quarter. That's just complete incompetence. So that, to me, is how you look at the VIX. You get into that high. Listen, I have a key. I posted in my my weekend review video every week. I don't want to reiterate what it is, but I talk about 20 to 22 is elevated, and 23 to 25 is really the high end of range. So if you're in an elevated area or near the high end of range, you probably want to, for right or right out, try to sell some premium. Not be looking to first add on your protection there. I mean, it just seems, when you go into these events, like these big scary events, volatility tends to expand into the event and then contract after the actual bad event takes place. So you really don't want to be, it's rare. Listen, once in a while, things go badly and you do get that major blow-up expansion, and that's, of course, what everyone is reminded of, right? The few times that actually happens, and that's what they play for. But most of the time, the volatility just comes in and compresses and crushes people. So to me, the biggest FU play tomorrow would be if SPY were to just pin 210 again. And if it does 210, everyone do a shot, by the way. That could be our new drinking game, pin 210. We closed at 210.81. Imagine we just pin 210. You would F everybody who bought puts and bought calls. The market makers would just sweep the field. That to me would be an amazing play. So let's see how this opens up tomorrow, how big the gap is. I will say this. Gaps that tend to be inside of an expected move tend to fill. Gaps that are outside of an expected move tend to extend because people are so badly burnt when it's a big move that that the damage is so great it can't repair right away. If it's small, it's probably going to fill and be choppy. If it's big, it's probably going to go, in either direction. Particularly if it's bigger than the expected move, which I've already told you is I think it was $3.60. Let me just look it up. $3.69.5. So 3.70. So if we get a big move, either above it or below this, like I said, this could be the start of the blow-off that I've been looking for a while. It might not be, though. We won't know until until it happens. But given the amount of run-up we've had, I would be a little wary of a gap. Like if we gap 2 points tomorrow, I might be, particularly if it's into some resistance, I might be a little bit iffy. So let's see how that goes. Anyway, I don't want to ramble on here. I feel like I've exceeded what I wanted to talk about today. We're not going to know until tomorrow. Second mouse, gap rules, opening 15 minutes to an hour range. That's going to be the key. And let's keep it simple, stupid. I will go into more detail and show more stuff in the weekend review video on Sunday. If you're not following me, my handle on Twitter is @JustinPulitzer. If you like this video or you caught it late or want to watch it again, it will be on my YouTube channel very shortly. That's Justin Pulitzer Trades. Anyhow, that's my story. I'm sticking to it. Let's have hopefully everyone will do well tomorrow, and cheers.